Hey, Dustin Tibbetts here, financial advisor with Jazz Wealth Managers, yada yada, jazzwealth.com. Get your dough straight. You know where to find us there. Hey, we're going to talk about earnings this week. We got a lot of earnings coming up this week, and there's actually 234 names reporting earnings outside the S&P as well. And that's not even like the peak of earnings. We've got 2 more weeks to go before we hit the peak there. So we're going to dive into a few. I share this on our research site. If you're interested, you can join jazzwealth.com/research. But I'm going to share some of the stuff here with you as far as what's going on this week. Basically, I put together a list. I'm going to go a little bit slower so we don't overwhelm you here. On our research site, we go over every single little thing there so you can know what we're talking about. But we want to look for things that stand out as odd, right? If you're a short-term trader, then you're looking for opportunity. If you're a long-term investor, you just want to make sure that what happens after earnings isn't odd. Let's think about it this way. If you own a stock and you're going to own it anyways for, 5, 10 years, whatever it is, well, then there's a natural behavior of that stock. And if something turns out to go in the opposite direction of its natural behavior for earnings, then you may want to look deeper into it to see if your assumptions, your whole belief, your investment philosophy is still correct. So we're really not looking at this for the long-term investors to make decisions other than, hey, is something wrong? Do I need to go learn more about the company here? So let's take a look. All right, so on the list here, you've got the ticker symbol, you got the name in case you don't know who they are, the date they report earnings, and we're going to include every single stock this week. I took out a lot of the no-namers, just, tried to keep things that were more interesting there. The time that they report, the morning or the afternoon, stocks report in the morning before markets open or afterwards for the most part. We also included something different here. We put their current earnings per share, and then if they revised higher, we wanted to know. And I'll point out something interesting here. So, in other words, Coca-Cola's current earnings on file are expected to be about 50 cents a share. Did they revise that number higher? In other words, did they say, we're going to do better than that? And the answer is yes. If you look through the entire list, every single stock actually revised their earnings expectations higher. Kind of a sign of the times, right? People think that stocks are doing better. The companies themselves think they're doing better than Wall Street predicts. So we've got 50 cents here for Coke, earnings revised higher. We then included the number of data points that we studied. In this case, it was 78 prior quarters. That's what we had on file for Coca-Cola. We looked at their beat rate. So in other words, how often do they beat on earnings? 70.5% of the time of the 78 quarters, they beat on earnings. Revenue beats 66% of the time. And then there's some stock performance off to the right. What I did here is I included in color any earnings or revenue beats that were greater than 75%. So you can see quickly, some of the better performers in there. And so let's dig through here. We've got the average gap, meaning the average opening price when they report earnings. If they report in the morning, then that would be that day. If they report in the afternoon, that would be the next day's gap. So for example, IBM reports after the close on Monday, right now, actually today after the close, and they beat, stats, all that great stuff. And so tomorrow, the average gap ends up being this. We then have the average intraday move, which we're showing there is what happens when the markets open from 9:30 Eastern time to 4 o'clock. And then we have the full day average. In other words, including the gap in the total performance there. What is the average performance? And then we include volatility in dollar terms if you want to take a look there. So a couple things that jump out to me as you're looking around. Netflix, number one, is going to be one of those that gets a lot of attention. Netflix tends to do that around earnings season. They report tomorrow after the close. They did revise higher on their earnings, 75 quarters. They beat 81% of the time on earnings, 62 on revenue. And here's the interesting thing. I color-coded the average intraday move if the stock tends to essentially reverse from its gap or do worse than its gap. And then I made them bold if it's above average. Let me explain. So Netflix averages a gap up of 1.11% after reporting earnings. Then its average move is down. So if you find that Netflix gaps higher and starts to reverse course, that would be totally normal. You'd be nothing to think about that, right? So it averages about a 1% gap up. Throughout the day, it tends to lose about half of that gap. And so the average full day move is about 0.5%. It ranks as one of the most volatile stocks as well. Now, some extra stats for you there. Netflix on this list that we're going to share is the second most volatile out of all of them. Snapchat is the most volatile. 5 of the last 6 reports actually did exactly that. It gapped up and then finished lower than the gap. So that would be normal. If you own Netflix and you're not going to sell it anyways, if it gaps up, you know, probably not to get too excited. Hopefully it continues, but statistically it's going to fade back just a little bit. If we look down here, Snapchat is the most volatile in terms of its days rate. Kind of a wild range there actually for Snapchat. 80% of the time it goes in the direction of the gap. So I'll go all the way up here so you can see. Average gap is 0.45%. The average intraday move is an additional 1.47%. And so the average day is quite positive for Snapchat. So it's worth maybe the volatility that you have to suffer through if you're looking. All right, if we go back, there's going to be a lot of semiconductors reporting earnings as well. Lam Research would be one of them. You might want to take a look at there. It is the most consistent stock in terms of earnings and revenue beats there, with the largest day's move and the least volatile. So there's a lot going on there. It's the most consistent in terms of beating on earnings. It has the largest full day move with the least amount of volatility. So naturally, there are other stocks that have bigger moves during the day, but they're more volatile. So you have to weather the sort of storm, so to speak. So that is Lam Research, semiconductor stock, if you want to take a look at that one. All right, going through here, you can see the names if you want to look through while we're talking here. I'm going to go to another one here. Overstock.com sticks out to me. It is the least consistent with the biggest loss, and it's the most volatile. So least consistent, barely beats on earnings less than half the time. Revenues are basically half the time. Averages a gap up. The move tends to reverse that gap and go negative, and so the full day tends to be negative. All of that for being one of the most volatile stocks that will be reporting there. All right, stocks where the gap is the day's excitement and then reverses or loses steam. So let's go through here and take a look and see, because there's a lot of airlines. Well, there's a couple airlines that report, but I'm looking for United up here towards the top. So when we look at this list, I'm just giving you ideas of what you can search for if you're looking for ideas. So we're looking for a stock where the day's excitement tends to come on the gap and then reverses or loses steam, right? So United's not one of them, but the idea would be it does something on the gap, but that tends to be the high. Maybe it reverses from there. Maybe it gaps down and then it starts to rally. So all the excitement is over there. Now, United Airlines actually ranks in its first quarter. So we're talking about only quarter one earnings here, ranks as the worst for this. So even though the average of all 42 quarters that we're looking at are pretty blah, right? Down about 1%. The first quarter, which is what United Airlines is going to report, ranks as the worst. The average gap is down 1.03%. The average full day is then an additional 3.26%, and it's only positive 20% of the time when it reports its first quarter earnings. So if you're interested in looking at the stock, I happen to think the airlines are showing a little bit of a bounce back, but statistically, it's where it's at. If you see it gap down and start to sell off, that would be normal. If you see it gap down and bounce a little bit and you're a trader, maybe there's an opportunity to catch that next leg down. So something to take a look at there. And it's only positive 20% of the times in its first quarter, just the quarter one reports there. Also ranks as the most volatile quarter, the first quarter for United Airlines there. All right, taking a look through the list again, a couple others that stuck out. I just looked briefly through this trying to find ideas. Discover Financial. This is a tough one because Discover is hinting at a breakout, right? So if you were to take a look at Discover's chart, I don't have a chart. I can't show you a chart. I'm sorry. Discover right now is basing sideways, hinting at a breakout there, but do you chase the breakout on earnings? So here we go. We've got an average gap up. It tends to reverse course and go negative. Not a very volatile stock, beats almost 75% of the time. However, in the first quarter, which they're reporting the first quarter earnings here, it's only positive 38% of the time. So, you know what I mean? This is a tough one because I see a breakout as far as a technical pattern, but it tends to gap up, which would in fact make the Discover break out if it doesn't by the time earnings comes out. But then it tends to reverse. So I'm like, oh man, this is a tough one. I was just looking through and, sometimes the stats you think, oh no, this time's going to be different. I think it's going to break out, so it's a tough one to kind of follow through there. But nonetheless, you can look through here. There's a lot of great names reporting. Airline stocks, a couple interesting names. MarineMax, we happen to own that one. Tends to do quite well on earnings. It does fade just a little bit from the open. It does add more from the open, so not too bad there. Market access in the financials there. Remember, the exchanges were leading the way for a while. Southwest Airlines reporting. Pool Corp which is new to the S&P 500, actually, or newer. You've got Intel. That'll be an interesting one as well. If you look at Intel there, not very volatile and also not very exciting on earnings. I think this time will be different with what's going on there. If you like your wrestling, WWE is going to be on there. And the last of the financials, American Express, Regions. There were a handful of others that I just took off because they were smaller banks, PBCT, People's Bank. I think they're reporting, some other ones in there. Other than that, the financials are basically done. And that's about it. You got a popular dividend stock there, Verizon. So Verizon is kind of a mixed bag, but look at this. This is a dividend stock for you. When you're looking for a dividend stock, you want preferably it to beat on earnings more, but that'd be more of a growth stock. So Verizon's not a growth stock. It's okay that it sometimes beats, sometimes misses. It's not going anywhere. They're about as big as they're going to get, right? So on earnings, it doesn't really gap, 0.1% higher. You can live with that. If you're holding it for the dividend, awesome. It tends to fade away just a little bit, but a fraction of a percent, you can deal with that. Average earnings day is 0.08%, and its volatility range is about $1.85. That is a very key definition there for an earnings stock, if you ask me. Coke would be the same. Where's Coke? Go back up to the top. Coke's the same thing. Very, very small movement on earnings. So what does that tell you? If you're owning Coca-Cola for the long run, purely for the dividend, you're looking for things that might, challenge your dividend, right? That might make that no longer. Probably not going to happen. But if you notice a large move one way or the other for Coca-Cola, then chances are something's changed. New CEO, bought a company, sold a company. Maybe they closed down in some area there. I doubt it, but those are the kind of things that you'd go, Coke shouldn't have moved that much. So I better go read up on it, make sure that my beliefs, my assumptions for this investment are still correct. All right, that's all I have for you. That was a little bit of a longer one, but there was a lot of stocks to review. If you like this, let me know in the comments below. Maybe this is something we can do each week. Again, my analysis is just based on the stats. I'm not here to give advice or try to, tell you what stocks to pick. Just giving you a different way to look at things. So hopefully that helps you. Enjoy the rest of your week, and we'll see you on the closing beat today, 5 o'clock Eastern, live on our YouTube channel. Adios.